Hey guys, my name is Evan and welcome to Economics 101, your number one source for everything economics. Have you noticed something strange about our economy lately? On the one hand, you have stocks that are booming, you have a luxury market that continues to increase, and wealthy households are doing just fine. But on the other hand, consumers are drowning in debt, housing is unaffordable, and millions of Americans feel financially squeezed. How can both of these things be true at the same time? That's what economists call a K-shaped economy. And in today's video, we're going to break down what a K-shaped economy actually means, why some groups are winning while others fall behind, and why this trend could shape the entire future of the U.S. economy. Before we jump into the video, I have a quick favor that really helps grow the channel. If you enjoy simple economic breakdowns without all the confusing jargon, please hit the like button and subscribe to support Economics 101. Let's dive into it. What is a K-shaped economy? A K-shaped economy describes an economic recovery where different groups move in opposite directions. Think of the letter K. One line goes up, one line goes down. That's the economy we're in right now. Higher income household and investors, asset owners, they're often going to move upward. Stock portfolios rise, home values increase, wages of high-skilled industries grow. Meanwhile, on your other hand, you have lower income households who are struggling with inflation, debt continues to rise, housing becomes less affordable, and wage growth falls to keep up with the living costs. So technically, the economy may look strong on paper while millions of people feel financially squeezed. That disconnect is the definition of what we call a K-shaped economy. We're going to switch and talk about things like stocks and real estate businesses. When the Federal Reserve pumps liquidity into the economy after a crisis and keeps rates low, asset prices explode upwards. Stocks surge, home prices surge, tech wealth expands. If you already owned assets and your net worth likely increased dramatically. But if you don't own assets, you mainly experience the downside. So you get the higher rents, higher prices, higher borrowing costs. So that's the divide in a K-shaped economy. Real quick, we're going to talk about how inflation hits different people differently. All right? So inflation affects everyone, but it doesn't affect everyone equally. So higher income households spend smaller percentage of their income on necessities, things like groceries, rent, gas, while lower income households spend much more on essentials. So when inflation rises, working class consumers feel it immediately. That's why many Americans say you hear a lot of people say the economy feels terrible right now, or they may say they're struggling. Even when you look at GDP and the stock market, which are both up or continue to be strong, you'll hear people say that, and that's because those individuals that their personal income is struggling. Real quick, if you want more videos breaking down inflation, recession, markets, and how the economy is actually doing right now, please make sure to subscribe because that's exactly what this channel is dedicated for. Let's hop back into the video, and we're going to describe or talk about the Federal Reserve, their role in all of this. So when inflation rises, the Fed raises interest rates to fight that. But higher rates don't affect everyone equally. People with cash savings may benefit from higher yields, but renters will struggle. First-time home buyers, they're going to struggle. Debt payments increase. Small businesses face tighter credit. At the same time, you got your large corporations and your wealthy investors often have more flexibility and somewhat of like financial buffers. So economic tightening can widen inequality even more. That's one reason the K-shaped economy has become such a major talking point among economists. All right. So all of this matters because the danger of a K-shaped economy is basically long-term instability. If wealth concentrates too heavily on one group, consumer spending weakens, social frustration grows, younger generations lose economic mobility, and political pressures increase. An economy works best when growth is broad-based. When only certain groups benefit, confidence in the system begins to break down. And that's why understanding a K-shaped economy matters so much right now. So the next time you hear someone say the economy is doing great, remember this. That may be true for some people, for a small percentage of people, but not necessarily everyone is benefiting. Okay? That's the reality of a K-shaped economy. Now I want to hear from you. Do you think the economy feels strong right now, or does it feel increasingly divided? Please comment below. And if you enjoy this breakdown, hit the like button, subscribe, and share this video with someone trying to better understand today's economy. This is Economics 101, where economics finally makes sense.